Hello children, the second lesson for the third midterm is Chapter 10 Control Accounts. The objectives of learning this chapter are to explain the purpose of control accounts and prepare a trade receivables ledger control account and a trade payables ledger control account. Before we start the lesson, turn to page number 121. Okay children, can you remember the trade receivables and trade payables we learned in chapter 5 books of original entry? Trade receivables are the credit customers of a business and trade payables are the credit suppliers of a business. There should be a proper set of accounts maintained by businesses to keep a good track on the business. If the business does not maintain proper accounts for the trade receivables, the business will not properly receive the money they should receive. And if the trade payables are not checked properly, the business won't be able to pay the debts on time. Ultimately, the suppliers will not like to continue trading with the business. Therefore, businesses should concentrate well on these two groups. Coming to the lesson, control accounts are the accounts which show the totals of the trade receivables and trade payables. These accounts are used to check on the credit revenue and credit purchases respectively. Now there is a little activity for you to do. Look at the activity box in page 121 and answer the two questions before we move to the next slide. In chapter 8 trial balance lesson, we learned that all the ledger accounts are balanced and the balances are taken to the trial balance to check whether the accounts are properly maintained. If the trial balance does not balance, there can be errors. These errors should be identified and corrected in order to continue with the preparation of financial statements. The control accounts are also a sort of a trial balance which are used to identify errors. But mainly, trade receivables ledger control account and the trade payables ledger control account are being drawn up. Trade receivables ledger control account is an account which contains the totals of the trade receivables ledger of the business. So, the revenue considered here would be credit revenue, not cash revenue. Hope you can remember the difference between credit revenue and cash revenue. If not, turn to page 74 and revise the two terms. Trade payables ledger control account is an account which contains the totals of the entries the payables have dealt with. Control accounts are also known as total accounts. This is because totals of the transactions of a period are concerned here. In order to check the control accounts mentioned in the slide, you will need all the balances of individual accounts of the respective ledgers. Now suppose we have the total opening balances of the trade receivables and totals of some other transactions as well, such as total sales returns, total discount received, total credit revenue, total irrecoverable debts, etc. We are able to calculate the total closing balance for the trade receivables ledger control account. Then when we add up the closing balances of the individual trade receivables accounts in the trade receivables ledger to check whether both total balances. If not, the control account can be used to identify the errors. 10.2 Example, a trade receivables ledger control account. There are 4 individual accounts of trade receivables in figure 10.2. Using the given 4 accounts, we are now going to prepare a trade receivables ledger control account. Let's see. We need to calculate the total opening balances using the opening balances of all 4 accounts. Then we can add all the credit sales of the 4 accounts to calculate the total credit sales. Add all the bank figures of the individual accounts to find the checks received. Add all the discount received figures to find the total discount received. Add all the sales returns values to get the total sales returns. Irrecoverable debt is only found in C. Young's account. So consider it in the control account as the only irrecoverable debt. Now use the total figures to draw and prepare the trade receivables ledger control account. After doing all the recordings, get the closing balance of the control account. In order to check whether you have done the calculations correctly, you can compare the closing balance of the control account with the individual closing balances of the 4 accounts in the trade receivables ledger. Note that control account is a way of checking the accuracy of the ledgers. If they do not balance, the errors are required to be identified and sorted out. Children, do the question in the case study in page 123 before we move to the next topic. 10.3 Information for control accounts. Now we will see from where we get information for the control accounts. First, the trade receivables ledger control account. The opening balance for the account would be taken from the closing balances of the trade receivables in the previous year added together. Credit revenue would be taken from the total of sales day book. Sales returns would be the total of the sales returns day book. Checks received from the debit bank column of the cash book. Cash received is from the debit cash column of the cash book. Discount allowed is from the discount allowed column of the cash book. Closing balances would be taken from the total of closing balances of individual trade receivables for this year. Next, trade payables ledger control account. This is similar to the trade receivables ledger control account. Read the two tables given in page 124 after listening to this slide. Next, we will learn where we record the information we collected. Figure 10.5 shows the trade payables ledger control account. The opening balance is recorded in the credit side of the account because trade payables are a liability for the business. This balance would be taken after adding all the opening balances of the individual trade payables in the ledger. Next, credit purchases will be credited to the account because credit purchases would increase the amount payable to the suppliers. This total would be taken from the purchases day book. Purchase returns will be taken from the purchase returns day book, and this total will be debited to the account because the purchase returns will reduce the amount payable to the suppliers. Bank will be debited because it reduces the trade payables of the business. The total bank figure will be taken from the credit bank column of the cash book. Cash is the same. Discount received would be debited to the control account and credited to the discount account as it is an income. The total discount received will be taken from the credit discount column of the cash book. Balance CD or the closing balance can be taken from the total closing balances of the individual accounts, or else we can balance the control account to calculate the closing balance. 10.4 Further examples. Now we will learn how to prepare a trade receivables ledger control account when information is provided. First, draw up an account with the title of the account, 3 columns each side, one for the date, one for the description and the other for the amount. The same way for both debit and credit. We will start with the opening balance. Debit the given opening balance to the account because trade receivables are an asset to the business. Total credit trade receivables will be debited to the account because this increases the trade receivables of the business. Checks received would debit the bank and credit the trade receivables account. Cash received would debit the cash and credit the trade receivables account. Sales returns would be debited to the account because this would reduce the trade receivables of the business. Finally, we need to record the closing balance given. Since the balance BD is a debit balance, balance CD should be credited. Now total both sides, both the totals should balance if you have done the account correctly. Refer to figure 10.6 for more understanding. Next, we will prepare the trade payables ledger control account. After drawing the account, record the opening balance. It should be in the credit side. Checks paid should be debited to this account because payments would reduce the amount payable. Purchase returns would also be debited due to the same reason. Both from suppliers are the credit purchases for the month, which should be credited to the account as these purchases would increase the trade payables of the business. Next, we had to record the closing balance. As the balance BD should be credited, balance CD should be debited by 15,453. Finally, total the two sides to see whether both sides balance. If the two totals are the same, it means you have properly recorded the transactions in the account. Didn't it balance? Don't worry children, there is an error in the account. Therefore, the totals cannot be double ruled till the totals balance. 10.5 Other transfers. Other than the entries we have learned so far, there are two more transfers for us to learn: irrecoverable debts and contra entries. Irrecoverable debts will be the amount that we won't receive from the customers. This should be removed from the trade receivables account. First, this amount will be debited to the irrecoverable debt account as it is considered as an expense. Then it will be credited to the trade receivables account as it should be removed from the account. Contra entry is a set-off. When a company is both the supplier and the customer to a company, this sort of an entry would occur. In this entry, trade receivables ledger control account will be credited and trade payables ledger control account will be debited. Now we will look at the example 1 in page 127 to understand how the contra entry works. A business has a trade receivable with £60,000 which has been debited to the trade receivables account. The same trade receivable has supplied goods on credit to the business worth of 88,000 which has been credited to the trade payables account. This shows that particular company is a trade receivable as well as a trade payables for the business. Now we will set off the amounts. Trade receivables amount of 60,000 will be credited to the trade receivables account and debited to the trade payables account. That is how this works. Children, don't get scared with the word set off or contra. Think this as a cash receipt and a payment. 10.6 Control accounts and computerized accounting system. Control accounts will be manually prepared in the businesses who use the manual system. But in businesses who use the computerized system, the control accounts will be automatically prepared. However, businesses would manually prepare control accounts despite of having computerized accounting systems. 10.7 Advantages of control account. We will see why we should use control accounts. What benefits do we get when using control accounts? First, location of error. The control accounts enable businesses to locate the errors identified. Second, prevention of fraud. The control accounts are under a good supervision of a senior member. This will prevent frauds taking place. If many were to handle control accounts, there might be frauds happening. Third, information for management. Control accounts show the totals of the trade receivables and trade payables ledger. It would be easy for the management to make decisions as information can be derived faster than referring separate ledgers and individual accounts. 10.8 Disadvantages of control accounts. Control accounts will locate the error, but not all the errors. There are errors which won't be revealed from the control account. They are compensating errors, error of omission, and error of commission. Hope you remember what these errors are. If not, turn to page number 80 and go through the errors listed down in that page. Summary. This is the time for us to revise what we have learned in this lesson. Children, in the control accounts, be it receivables or payables, we will be considering the transactions made with the credit customers and credit suppliers respectively. Only irrecoverable debts will be recorded in the receivables ledger control account, not the allowance. This is because allowance is just an estimate, whereas the irrecoverable debt is recorded because it is for real and it is a confirmed value which can be considered. Remember children, the contra entry would be debited to the payables control account and credited to the receivables control account. Control accounts which are being prepared monthly would help a business to reveal errors in the two personal ledgers, receivables ledger and payables ledger. Read and understand the green color hint boxes in page 122 to 128 and the red color note box in page 124. End of chapter questions. Turn to page 129. Now we will discuss the end of chapter questions. First question. Why does a business keep control accounts? Now, control account is known as a mini trial balance which helps the business to identify errors if there are any available. So, a business would keep control accounts to act as another check on the trade payables and trade receivables ledgers. Second question. What is contra? We now know that a contra will be available if a business acts as both the roles as a customer and a supplier. So the answer can be written as a set off between two entries in both types of control accounts. Third question. How often does a business prepare control accounts? Children, this might depend on the business, but normally the control accounts are prepared monthly. Fourth question. In which control account would you find irrecoverable debts? Can you guess? Yes, irrecoverable debts are found in the trade receivables ledger control account. For a business, irrecoverable debts would be from the receivable side, not from the payables. Remember this reason. Fifth question. Name the three ledgers. I think you have answered this question in the activity 2. However, the three ledgers are nominal ledger, trade payables ledger and trade receivables ledger. Sixth question. Explain how a trade receivables ledger control account should be used to verify the balances. Similar to the example discussed in page 122 and 123, we can compare the balances of the trade receivables ledger individual accounts with the control account. Both should balance. This is how a business could verify. Last question. Explain two ways in which the trade payables ledger control account can act as an aid to managing the business. Children, for the answer you can refer to the advantages of control accounts. Locate errors, avoid fraud and information for management. In addition, the control account would help the businesses to make sure the suppliers are paid on time, which would otherwise create a bad reputation. Now, write down the answers neatly and correctly in your notebook. Children, now you are required to do the exam practice in page 130 and 131. Here are some references for you to use in order to gain more knowledge on control accounts. This is the end of the chapter 10, control accounts. See you soon children. Stay home and stay safe.